What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol WYNN for Wynn Resorts. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, first things first, we have not covered this one yet on the channel. This one did have a catalyst this morning, a negative catalyst involving some regulation fears. Regardless, we're going to start by making a roadmap from the daily time frame of obvious areas of support and resistance. First thing to note clearly is the large gap overhead and the fact that this gap actually filled on today's session, so that does strike me as important. Also noting we have support here as well as a quick little sort of false breakdown there, right, at that 87.70. Anything else, jumping off the page, I would argue not really. That looks good here, and we'll just map this out as overhead resistance as well, closer to 103. So shifting the focus now to the 30-minute intraday time frame chart to see what else we can learn about today's price action. Of course, the gap does remain overhead, and that would be the first thing to logically talk about, where if we start trading up above 95.42, the gap should fill up towards that 99.50 mark. Technically, it's slightly above that 99.40. You can see the lower wick from Monday is, slightly above that. So that would be the upside play. And how would that unfold? Well, technically, into the end of the day here, we're getting a little bit of a bull flag, from the acute sense, right? Obviously, in the grand scheme of things, this down move here could be looked at as a bear flag like this. That's why I said bear flag at first. Or you could look at it in the acute sense again as a bull flag, something like this. So the way that we would unlock 95.42 would be if the bull flag scenario plays out, in which case you're looking for a break of this resistance trend line, just noting that we're kind of butting our heads up against it, but not able to really get through it. And you would not want to see this area right here violated to the downside at 91.75. So as of right now, all things are fine. We're currently opening inside of that range based on the bid-ask spread and the post market. So we'll see if that can break headed into tomorrow's session at 9:30. If we do move to the downside, right, then what we're looking for is a bounce at today's low of day, really not so much this area in here, and then that would be the chance for an equal high or equal low, and something that would look like an H pattern, right? And typically, if you break the lows of the H, you go lower, and as we know, that would just bring us into that 87.70 mark from the prior pivot low in here. Let's just scrunch up the chart, see what else is underneath us, just so we know, if this breakout or breakdown really does start to happen, what's up next. And what you'll notice is there's actually a gap. So way back here, I'll zoom in on it in just a second. Let me get these levels in first. What you'll notice is right here, there is a gap in the history, right? So we have 85.82 fills down towards 80.95, and that's slightly concerning, just noting that, again, if we take out today's lows and move lower under that pivot low, there's quite a ways to fall, right, down towards that gap fill area, which, again, is closer to 80, the round number, so about a $10 fall here available in Wynn if the most bearish case does play out. Well, again, I don't really think that is the case because we do see this small lower wick forming, not small lower wick, but lower wick forming from the daily perspective. The last thing I want to do, which will help us gauge sentiment and the strength of today's selling, is basically take out the fibs and analyze this move through that. And what you'll notice is that we are actually holding the 38.2 as support. That's the low end of that bull flag we discussed. And as long as we remain above that, you are looking for the upside scenario to play out. But if we roll over underneath, then it's very likely we do the H scenario. And again, taking out the lows of the H does put into play that gap underneath at or filling down towards that 80 whole dollar. So please be careful if you are trying to trade this long and we get the breakdown here. It's not worth it from a risk reward perspective to hold it all the way through down towards 80 if you're just targeting up here at this 99.40 mark on the gap fill overhead, right? So different gaps to be looking at in the chart. That's making this slightly confusing here, but from a very simple perspective, what you're looking out for is simply, do we break out over this little pennant that we have here, or do we get the H that plays out for lower? So those are my thoughts and levels here on Wynn. If you enjoyed the video or learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.